India is booming. Digital infrastructure, data centers, and business parks are expanding rapidly. But behind the numbers, how are the companies navigating this transformation on the ground? In this episode, we speak with Mr. Gauri, CEO of CapitaLand India Trust, to uncover his perspectives on growth and strategy to provide more insights for investors. Come join us in this conversation. Very pleased to welcome Mr. Gauri, CEO of CapitaLand India Trust, to join us today. Mr. Gauri, could you first share with us more about yourself?
Thank you, Hazel. Thank you for having me here today. And first, welcome to CapitaLand India Trust. I've been with CapitaLand for the last 12 years. I started on the private fund side of business. We used to be called Ascendas back then. Did a lot of investing and raising private equity capital, deploying, divesting. Did that for about 4 years. Then I was seconded to India to set up the logistics platform, where I was the chief financial officer and the head of investments after that. Again, raised private equity capital and deployed it into a bunch of assets in the industrial and logistics space. Did that for about 5 years. Then in 2022, I was made the CEO for the India Business Parks operations side of things. So gained a lot of operational know-how in running business parks in India between 2022 and 24. And since August 2024, I'm here managing CapitaLand India Trust and trying to use all the 25 years of experience I've had in real estate to bear on delivering fantastic returns for CLINT unit holders.
So CLINT was listed on August 2007 as
Yes.
Asia's first Indian property trust, and it focuses on a diversified portfolio that includes 10 IT parks, 1 logistics park, 3 industrial facilities, and 4 data center developments as of 31st December 2024. So right now, India has been undergoing rapid digitalization and infrastructure development. So could you share with us more about the current market trends in India, particularly in sectors like business parks, data centers, the industrial facilities? How is demand evolving?
IMF predicts that India at this point in time is probably the 4th largest economy in the world. We definitely were 5th, and I think this year we moved into number 4, and by 2030 we should be the 3rd largest economy. This has come about through a lot of investments, and like you rightly said, in the infrastructure space, both the physical infrastructure, roadways, airways, railways, and also the digital infrastructure. And this has benefited all the 3 asset classes, the ones that you're mentioning about. If you talk specifically about business parks had probably the best leasing ever in 2024. Close to 79 million square feet of space was gross leasing happened in 2024. That was almost 16 to 17% year-on-year increase over what was 2023. And similarly, in the industrial and logistics space as well, close to 13 million square feet, almost 17% year-on-year growth happened. And same goes well for the data center space as well. There are reasons why these 3 asset classes are significantly benefiting, and the trend is vastly different if you compare India to the rest of the world, especially in business parks. India, you need to realize, is becoming the global working capital provider. It has a very young population. The average age is about 28, 29. Close to 1 billion people are there in the working age category. I think that is the first time ever in the history of humanity that one country is having actually more than 1 billion people in the working age category. And that demographic dividend, as we call it, is expected to last for the next 25 to 30 years. So if today you want to go to any place on earth where you want to recruit English speaking, STEM educated, young working population, and you want to recruit them at scale, India is the only place. You could go to any city in India, open a company, recruit 100 PhD scholars, train them, and make them productive within 1 year. Also, India is moving up the value chain in terms of what the work that they're delivering. 15, 20 years back, it used to be mostly, voice services. So if you called a Microsoft helpline, somebody in India will pick it up and talk. Today, it's moved on. Today, you have cutting edge research being done. You have, AI, ML, all of those, fundamental, data driven analysis is being conducted from India. So some of the banks in India, some of the leading banks of the world have offices which employ close to 60-70,000 employees working from India, and they cover end to end. It covers from front office to middle office to back office. So these sort of numbers are unique to India because of the demographic dividend, and India is significantly, the business parks is significantly benefiting from some of these.
Exactly.
Second, India is it's 1.4-1.5 billion. It's a consumption market. People have to consume, and on a per capita basis, the logistics and industrial spaces that India have is significantly low as compared to the rest of the world. So India has a lot of catching up to do in terms of how they're going to modernize their logistics facility. The industry actually evolved only over the last 6-7 years, and it has really taken off post COVID. So India needs a lot of modern warehouses. India spends close to 13% of the cost of production in terms of logistics cost, which as compared to the rest of the world is more in the 6-8% range. So India ends up spending more on logistics because of the lack of available infrastructure in the logistics space. So therefore, logistics is becoming a very, very attractive market. On the digital side of things, the internet penetration in the last 5 years increased by about from 33% to 55%. That's almost like a 60% growth in the internet consuming crowd. India today consumes close to 20% of all digital content globally, but India has only 3% of all digital storage. So that's a huge divide. So therefore, there is this huge gap for you to fill by setting up data centers, which can deliver this content, which can process this content, which can store this content. That's the reason why at CLINT we are focused on all these three asset classes.
And it's more diversified in that way
Yes,
too.
yes.
Based on all these market trends, walk us through on how CLINT is positioning itself to capture the growth. What are the key pillars of your strategy for the next phase of expansion?
Yeah. I mean, if you look at the broader picture, when you say business parks, industrial logistics and data centers, it translates into something like, work, live, play. Work, your business parks, which, in India, business parks and office parks are interchangeable. So that's where, the 95% of the population is going to work. By live, it's not just the, people immediately refer it to, housing, but by live, I mean consumption. People have to consume to live. So consumption is delivered through, logistics. You need to eat, you need to, have goods to enjoy. So that is delivered through logistics property. You need to have warehouses to, store those goods to be delivered for consumption. And you need to have industrial facilities to manufacture those goods for consumption. And the play part of it is, I talk about today, we end up, a lot of digital play. Most of the global consumption today is in the digital side of things. So by catering to these three distinct human needs, we are able to sort of ensure that there is always demand for our products. So that's the larger framework that we are operating in. In terms of more specific tactical strategies, what has we don't want to reinvent the wheel too much. We are unique in India in the sense we do a lot of forward purchase programs that has delivered extraordinary returns to the unit holders. So we will continue down the path of doing forward purchase programs across all these three asset classes wherever it makes sense. Second, we will continue to look at doing a lot of redevelopment. Like I was mentioning, we have properties which are 25 years old as well. And with the improvement in infrastructure, for the ability for you to bring down a building and on the same parcel of land construct something which is 2 times or 3 times or 4 times a higher floor area is much more. So we are looking at a lot of redevelopment, particularly in cities like Hyderabad, wherein, as an example, we brought down a building which was 220,000 square feet, and in the same parcel of land we developed something that was 1.4 million square feet. So we are able to literally 6 to 7x the area without actually changing the
Changing
footprint or
of the
the
land.
actual land that was getting consumed. Then it is going to be more operational, in the sense we are going to look at ensuring that the increase in the top line translates to increase in the bottom line. So the net property income, the margins that we are able to make, we want to increase it. We closed last year at about 74%. We want to drive that higher, make it 75, 76, 77. Ideally we would want to push it to as high as 78 to 80%. So that means the yields that you're generating and the distributions you're able to make to unit holders
higher.
is much higher. So that is operational, control costs and improve the bottom line as well. And also we are looking at sort of tactically looking at some of the assets which are not strategic to us anymore. Can we sort of recycle some of the capital is what something we are looking at. We have identified a few properties which we want to sort of divest and then reinvest those capital. So these are some of the strategies on a more tactical basis that we are adopting to ensure that we stay ahead of the game on behalf of our unit holders.
So over the years, CLINT's portfolio has expanded significantly, underpinned by the consistent financial performance. So could you share with us some key latest financial highlights that you are particularly proud of?
We started in 2007 with about 3.7 million square feet, thereabouts. Today we are about 22.8 to 23 million square feet. A significant growth. We almost have 11% CAGR in terms of the area that we have been managing. If you look at our 2024 results, we had a very good year. Our total property income grew almost about 18-19%. Our net property income grew by about 14%. We delivered a dividend of close to 6.84 cents for the year. That was a growth of about 6%. Very few units in the SUT universe actually delivered positive growth in DPUs last year, and we were one among those few. So in terms of performance, we have had a really good financial performance. In terms of operational performance as well, it has been a great year. We closed the year at about 95% occupancy, the highest among our peers. There were two assets which we are building speculatively, about 800,000 square feet building called MTB 6 in Bangalore, that got fully pre-leased to a global Fortune 500 company that is in the chip manufacturing industry. We also did a speculative building in Navi Mumbai for a data center. That got fully pre-leased to again a global hyperscaler. In fact, the handover is happening as we speak to the global hyperscaler. So some of these achievements we are very proud of, and this actually shows the strength of our teams on the ground. We are able to deliver. We are a full service real estate investment manager. We can go from land acquisition to design to construction to leasing to asset management and to divestment. So these skill sets have been developed in India over the course of the last 30 years we have been there. We are among the most successful Singaporean firms in India, and that is across asset industries. This is not just in real estate. So that's something which we really leverage on to deliver consistent returns to our unit holders.
And you mentioned about the high occupancy rate of 95%, which I believe is above the market level. So what differentiates the assets in India, your assets in India, from others to achieve such a high level of occupancy levels?
I would say I would put it into three distinct buckets. The first is the quality of the asset itself. We always choose and build grade A quality assets in really really well located micro markets. It is not just newer assets. In fact, our oldest asset in India completed 25 years in 2024. We celebrated the silver jubilee. The quality of the asset is so good that the highest rental reversion in 2024 happens to be in the oldest property we own in India. So the rental reversion was close to 16% in our ITPB property, which is the oldest asset that we own in India.
That's amazing.
And the reason is because we consistently invest in asset enhancement. So all our parks, if you visit them in India, and I definitely recommend you to visit them at some point in time, have amenities such as healthcare facilities, gym, childcare, banks, ATMs, food court, smaller retail establishments. You are in a park where you have free green breathing space available. So all of this goes into enhancing the quality of the asset, and those are the hard aspects of it. We also make our parks very very vibrant. Every year we conduct close to 60 different activities or events in our parks, and this could be musical nights. This could be celebrating. India has tons of festivals, so we keep it a very very vibrant environment so that the tenants that we have, their employees like coming back to work. And it's a very young population, so that's why you see the footfall in our properties is in the 70% plus, which is among the highest you will have globally. So that's the asset part of it. And the second is leasing is an art, and leasing to tenants, and each tenant has a different way of how they go about taking their leasing decisions. Some of them do it locally, some of them do it regionally, some of them do it globally. So the global managers decide which property to choose to lease for some tenants. For some tenants it's like the local facility manager who decides, or the local business leader who decides which property to lease. So to address to this, we are among the very few real estate investment managers who actually have in-house leasing teams, both at the local levels. Like in each of the cities we have between 4 to 5 strong leasing teams. We have regional teams which are headquartered out of Bangalore, which do pan India, and these teams are the leaders in the teams have been doing it for the last 3 decades. That's when the industry itself opened in India, so they know every counterpart since their days in college. So that brings a lot of strength in the relationship. And for most of Asia, Singapore becomes a regional hub. A lot of leadership of the companies that take up space, they're headquartered in Singapore, and we have our global customer solutions team sitting here, pitching our properties in India to leadership that are here living here in Singapore. So we are able to kind of identify business opportunities ahead of the curve. So even before the market knows there is this demand from a client, we are able to pick on that because we are covering all the regions. And we are also able to address the concerns of the tenant, give them the comfort, what is the quality we are delivering, when we are delivering, how we are delivering. So that engagement across the entire vertical of a tenant gives us a higher probability of winning tenants, gives us a higher probability of getting slightly better rents. And third, I think, which is becoming very, very important, is our commitment to sustainability. As CapitaLand, we have a 2030 master plan. It's not just a statement, but sustainability is core to everything that we do. in our properties. So we invest quite a lot, invest as much as we can to reduce the carbon intensity in our projects. We bring about digital solutions to ensure that our properties are able to, we are able to maintain, measure and maintain the power requirements in a property in the most optimal manner. More than 94% of our buildings are green certified, which is among the highest among our peers, and even if you compare to the Singaporean standards, it's quite high. We also have, in 2024, we went live with a 29 megawatt solar power plant, which powers all the energy needs of our business parks in the city of Chennai. So that's a strategy, which we are also willing to adopt, in terms of making as much energy consumption, green based energy consumption. And this recognition is also being awarded by the industry. So GRESB for the first time gave us a 5-star rating in 2024, which puts us among the top 20% across all industry, not just in real estate, across all industry, in terms of commitment to sustainability. So these are the three buckets and the sort of the edges that we have against competition, which is why we have such a high occupancy.
Right, so the asset quality, the leasing expertise, and sustainability features.
Absolutely.
For investors, DPU stability and the cost management, there are key concerns in this high interest rate environment. So how is CLINT navigating the financing costs while continuing to grow its dividend?
Fantastic question. If you'd ask me what is the pole star for CLINT's management, I would say stability and growth of DPU. The rest all is of a secondary importance. We want to deliver consistent and growing DPU for our unit holders. First up, it's we want to keep things simple by ensuring that the debt that we raise is the cheapest that we can do it. So historically, we used to only borrow from banks, and in 2024 and 25, we started issuing bonds. We have issued 2 bond issuances in Singapore. We want to attempt doing bond issuances in Indian rupees as well, because it has 2 benefits. One, you get a natural hedge. Our income is in INR. Our debt cost will also be in INR, so there is a natural hedge, number one. And number two, you have full interest rate deductibility for tax purpose. So your tax shields are going to be much, much better. So your net realizable income that can be distributed is going to be higher, because if you're sending an offshore loan to India, it's only partially deductible. There are caps on how much you can deduct from your income, how much you can deduct. The interest expense is only partial. We want that full deductibility, the full tax shield effects to flow through. So capital management is one significant portion of our strategy for generating better and consistent dividends to our unit holders. And like I was mentioning before, we are also looking at containing costs as much as we can in terms of the operational costs of running the business, improve the NPI margin to as high as we can, so that the flow through to unit holders is high. We also want to reduce debt. Talked about recycling. One of the main purpose of recycling is to try to reduce debt as much as we can. Not just reduce debt, we also will identify properties. Let's say it is generating 8.25 or 8.5 yields as of today. If we can divest that asset and use that capital and redeploy it in assets where we generate 10+% yields, that immediately becomes accretive to unit holders. And we also have that alpha factor. Being a business trust, we also do greenfield development, and the yields that we make on those greenfield developments are in the high double digits, particularly of assets that we already own. So they may be temporary blips in terms of the accretiveness of those, but once fully developed, they give a tremendous value for our unit holders in terms of dividend accretion. So overall, these are some of the ways and means we have identified to give consistent and growing DPU to our unit holders.
Yes, and I'm sure that unit holders will be happy to hear about
Absolutely.
this very investor-focused strategy for CLINT.
Absolutely.
With the rising geopolitical tensions, such as the Trump-era tariffs potentially impacting the global trade flows, do you foresee any direct or indirect implications on CLINT's operation in India?
We have done a bit of a survey among our tenants, subsequent to the Liberation Day, policies that that came about from the White House. So far, the impact has not been really, material at all. Simply put, India, I think it's about 2.5% of its GDP is dependent on exports or goods exports to the US, and the tariff at this moment is only about 10%. So service industry doesn't have any tariff. So it's outside of the tariff regime.
Right.
So all our tenants are in the service industry.
Exactly.
And this is service industry, something which is super critical for the US economy as well. So therefore, we don't see any impact per se. In terms of new signings, yes, there. When there's a lot of geopolitical turmoil which is happening, all the boards and all the decision makers take a pause. But I think with the situation evolving, as of yesterday and the day before, I think the markets reacted to the gesture made by the Chinese premier and Mr. Trump, that they are going to reconcile the differences in the interim, and they're going to give a pause to the trade tariffs that have been going back and forth. Immediately the markets have reacted, and so we expect some of those positive news coming in to help in quickening the signing of new leases. In fact, it could actually benefit the logistics and warehousing industrial complex, for the simple reason that India is probably among the lowest tariffs in all of Asia. So anybody wants to set up shop in Asia, it's they better set up in India because it has the lowest tariffs. And even those that want to sort of reshore, they will manufacture goods in the respective markets that they already present. They'll set up an assembly plant in India, bring it into India, assemble it, make it, put it as made in India, and then ship it out at a lower tariff. So some of those strategies are going to come into play.
Makes a lot of
So
business sense.
net it could be actually in a strange way help India, particularly in the logistics and the warehousing / industrial space.
And very finally, as part of our Leading with Joy series, we'd love to hear a perspective on leadership as well. So what kind of culture are you looking to foster at CLINT, and how do you lead with clarity, purpose, and joy?
I at least see leadership as someone who can set a vision, who can bring good people together, and can go about converting this vision into reality. That is how I see leadership, at least in my own context. So when I reflect that for CLINT, I definitely believe that we want to make CLINT among the best performing units in the entire S-REIT universe. We have some really fantastic and passionate young set of people who are there with me, committed to delivering on this vision. My job is to empower them and help them achieve these goals of becoming the one of the best performing units in the S-REIT universe.
Thank you, Mr. Gauri, for sharing on all this insightful on your strategic direction for CLINT moving forward, and also providing more perspectives on the India market.
Thank you so much for having me here.